that, and good morning to everyone. Let's go ahead and kick things off. Welcome to the explosive traffic pattern for options. So let me go ahead and see here. I'm going to open up the chat box. Okay, so let me I'm going to forward my my screen here, which should be, I think everything should be working fine. Okay, so my background is in the hedge fund space for about 20 years. I've been the senior strategy developer, really with a focus on technical analysis, creating indicators to forecast prices, and creating quantitative models driven by price charts to actually generate the buy and sell signals as well. So that's been my background for 20 plus years. Love it, and eat, sleep, and breathe chart trading. It's the best way to trade the markets in my mind, hands down. Quick risk disclaimer before we kick things off: trading involves a high level of risk, excuse me, and therefore is not suitable for all traders. Before deciding to trade, you should carefully consider your trading objectives, level of experience, and ability to tolerate risk. Also, a hypothetical risk disclaimer: hypothetical or simulated performance results have certain limitations. Unlike an actual performance record, simulated results do not represent actual trading. Now, in this presentation, I'm going to show you one of two things. I'm going to show you real, actual trade alerts that we published ahead of time. So this is not with the benefit of hindsight. These are trade alerts we actually published ahead of time based on our predictions, and then I'm going to show you a number of real trades as well in this webinar. So let me go ahead and start at the beginning here. Back in 2017, we launched a new options trade alert program. The program was designed to beat the markets through probabilities using a number of different strategies. Now, each week we would broadcast 50 to 70 trade picks. Obviously, for retail traders, that's a lot, and that's not necessarily gonna work for retail traders who are really looking for a smaller number of 3 to 5 picks. So I'll show you where the story is going here. But we finished our first 24 months of this institutional service with pretty exciting results. So let me just go over these and tell you how this fits into what we're talking about today. So the first 24 months, we had 1,027 trades that made over 100% profits. We had 365 trades that made over 200%, and then we had a total of 2,383 winning trades. And then if we added up all the winning trades and all the losing trades together, we had a net performance of 84,994% positive. Now, that number, what that represents is, it's important to understand, we had multiple exits. So we had a total of 3 exits, 2 profit targets, and 1 we'll call it end of trade exit, if you will. And the way we calculated these numbers is the profit target, excuse me, made 250%, and the exit made 200%. We would take the profit target. So you have to have a consistency in how you're capturing the results. Now this webinar is not about that, but I want to make sure that you understand how it's done. So that's what we did there to log in these results, if you will. This is a equity curve for about 24 months here, just showing you it's fairly consistent. It wasn't always profitable. There were weeks that we lost money as well, but overall pretty good. Now, where this is going, although we were excited about our results over the first 24 months, the real breakthrough came when we noticed similarities among many of our winning trades. So this is a funny story, side story here. So we had a lot of retail traders come and say, well, I love the service, but can you just tell me what the best trades are? And that's kind of a funny question, right? I mean, yeah, that's the question in the markets, right? Which trades are the best trades? But at the same time, when you're broadcasting 50 to 70 trades, the trade alerts, that's a really good question. Can you narrow it down for me? Just what are the best trades that I'll be focusing on? Because this service would focus on a number of different strategies to make the predictions. Now, what we did is we actually started to study similarities in some of our biggest winning trades. And this is where this all started, which was really interesting. What we found is that when 3 market conditions appeared, the stock would often experience a big price move. The 3 market conditions were like hidden clues that a stock was about to either take off to the upside or drop like a rock. For example, in late 2017, when the SPDR DIA ETF experienced the 3 bullish market conditions, it ended up taking off to the upside. So when we saw these 3 conditions, and these are represented by the 3 green dots you see on the chart here, we recommended to our followers to buy the DIA 235 calls, and those ended up jumping in value by 138%. So what I did here is a lot of people don't understand what does that mean for my, for my trade. So when you're trading options, you're buying a premium. So I'm giving you two different levels, so like a small account and a larger account level. So if you bought $200 worth of these 235 calls, that would have grown to $876. If you bought $1,000 worth, that would have jumped in value to $4,380. So I'll include this so you can picture in your mind, what does the return actually mean? Now, let me just tell you what this is not. I'm not putting this up there as a way for you to say, look how much money I would have made, and that's that. We're not approaching it from that angle. It's just more so you can visualize what the return actually means for different size accounts. Then in March of 2018, when Wells Fargo experienced the three bearish conditions, now we can get these both in the bullish form and bearish form, then WFC ended up dropping like a rock. So we recommended when we saw the three red dots, which you can picture are just the opposite of the three green dots, we recommended buying the WFC 56 puts, and those ended up jumping in value by 515%. Now, I'm going to touch on this here in a minute, but I'm going to show you exactly what these conditions are. So I'm going to show you, I'm going to reveal everything here, and you'll see exactly what they are and how they come together here to form this really exciting pattern. So 250 in this case would have grown to $1,540, or $1,000 would have grown to $6,150. And the really exciting part of these patterns is every single one of these trades that I'm showing you, these alerts, was 5 days or less. So that's the crazy part of all this. We're not buying an option, a call option, coming back 3 months later and seeing these types of returns. These returns are happening in days, literally. Now they can take more. They can take 10 to 15 days if they really start to develop, but in general, it's days. It's not weeks. It's not months that these trades are developing in. So the three market conditions were like three distinct patterns, which we developed into the three lights pattern, or the traffic pattern. When the three market conditions triggered, at the same time, the stock often experienced a big move. Like when JP Morgan experienced a bullish traffic pattern, you can see it here on the chart, the three green dots. We recommended buying the JP Morgan 98.5 calls. Those ended up jumping in value by 568%. So $200 grows to $1,336, or $1,000 grows to $6,680. Or when the Citigroup options experienced, or Citigroup experienced a bearish traffic pattern, you can see that here on the chart, the three red dots. We recommended buying the C73.5 puts, and those jumped in value by 400%. So 250 grows to 1250, or $1,000 worth of these put options grows to $5,000, depending on the size of your account. Or when UPS experienced a bearish traffic pattern, these are all real trade alerts we published, then we recommended the UPS 111 puts. Those jumped in value by 413%. 250 grows to 1,282, and $1,000 would have grown to 5,130. Now, when the traffic pattern appeared, stocks often had big price moves and options jumped in value, because options can make big profits when stocks experience big price moves. And really the best of all worlds when you think about trading options, and this is buying calls or buying puts, the best of all worlds is when you're not only correct about the direction, but you also get a pretty strong move in that direction, because then you can get a benefit with implied volatility jumping as well. So buying a call and puts options is the perfect way to cash in when stocks are likely to make a big move. We named this new strategy the traffic pattern option strategy, or the three light strategy. Trading system flashes green or red to signal when a stock should go up or down. The traffic pattern not only focuses on direction, but also predicts when a big move is likely to happen. And big price moves are what make options really explode in value. Now, here's where it gets really entertaining. All right, this is actually a true story from the past. You can't make this up, but I'll tell you where, in my thinking as an early trader, where this started to come into play. And this is entitled, What I Learned from a Genius Convicted Felon. So back many years ago when I was in school, my father had a friend who loved trading as much as I did, and he was sharing this story with me. So he was a stockbroker back in the early 80s, and he saw an advertisement in a magazine that advertised a highly secret trading strategy. So he responded to that. He reached out to his biggest client and said, hey, I found this ad for this strategy. Intrigued by the ad, my friend convinced this top client to spend $25,000 to buy this secret trading strategy. Now, I can tell you $25,000 in the early 80s was a lot of money. You could buy a really nice BMW for that. And it's a lot of money today, but it was a lot of money back then. It felt like it was like, over 100,000 back then. But for sight unseen, you can picture him, reading this magazine. Remember, this is pre-internet days, so it's not. That's where you went. So traders back in the 80s would look at magazines. In large part, that would be the source, if you will, of this type of thing. So he took a chance, sight unseen, if you will, and got his customer or his biggest client to spend $25,000 on this strategy. So they traveled. They both bought plane tickets to go get this strategy. They already paid for it. They traveled to meet the creator of this special trading strategy. And this is where the story gets very strange. So remember, it's pre-internet. They can't do a lot of checking, if you will, on the information around the developer of this. But they arrive in Dallas, they rent a car, and they go out to the address that was given to them. And the first thing he notices is this doesn't look like a neighborhood where I should be buying such an expensive trading strategy. It was a very normal looking middle class neighborhood you can picture in your mind. So he's a little bit concerned right out of the gate. They pull up the house, and him and his client both go up and knock on the front door. And then all of a sudden, this mad scientist guy answers the door. His hair's a little bit a mess. And the first thing this guy says is, instead of come on in, thanks for spending so much money on my strategy, he says, do you guys mind meeting me in the garage? So he wouldn't even invite them into his house. He said, go around the garage and I'll meet you out there. So this is starting to get really strange now. They go out to the garage. This guy goes and opens the garage door, walks in the garage. The first thing he says is, I just got out of prison. So you can imagine my father's friend, who became a good friend of mine, was just outside of his mind at that point, because he already had his best client spend $25,000 to purchase a strategy, and the money was spent. So this is where it gets really entertaining then. So what happens is, this guy wasn't a violent criminal. He was in white collar prison because he helped the Hunt brothers corner the silver market by creating these high-tech listening devices that would allow them to eavesdrop on different conversations. So that's why he was in prison. And as it turned out, the man researched a lot of charting greats, including Fibonacci, Gann, and Elliott Wave, and a lot of the chart patterns. So what he discovered during his slow days in prison was really interesting. So this guy was a genius, and he was a scientist. He just falls in love with trading and really gets interested in prison. And so he observes in prison, while he's doing his research, that certain chart patterns have predictive values. Now, today we kind of know that more than they did back then, I think. But here's what he found out. What was really intriguing was that when he combined multiple chart patterns, they often produced superior results. And this is not only in terms of direction, but this is also in terms of explosiveness. So you can imagine, if you have one chart pattern saying now's the time to buy, and then you pile on another chart pattern that says it's time to buy, and they're all saying the same thing, he noticed that not only is it good for direction, but also those trades multi-chart pattern trades would result in more explosive results. So the accuracy of these multi-pattern predictions, these incredible forecasts, would increase dramatically, and explosiveness would increase as well. So today, the traffic pattern follows these same principles that this man uncovered. With our strategy, we're leveraging multiple conditions that signal when a stock is likely to take off or drop like a rock. For example, when the three bullish traffic conditions lined up for Ford, the stock ended up taking off. So we recommended buying the Ford 12 calls, and then over the following days, it ended up jumping in value by 177%. So $100 would grow to $277, $1,000 would grow to $2,770. When the three bearish traffic patterns lined up for the SPY, and remember, it can be not only in the upside, the bullish side, but also they can be forecasting a down move as well, then the SPY ETF sold off hard. So when we saw these three patterns align, the three red dots, we recommended buying the SPY 274 puts. Those jumped in value by 488%. So the SPY, again, the 274 puts, if you put 250 in there, that grew to 1470, or $1,000 would grow to 5,880. You get the idea. And when the 3 bearish traffic conditions lined up for 3M, the stock ended up plunging. So we recommended buying the 237.5 puts. Those jumped in value by 532%. So 250 ends up growing to 1580, 1000 ends up growing to 6320. Now, a lot of you are saying, okay, what are the patterns? Okay, I'm dying to know if these patterns are worth watching, worth tracking. What are they? I'm going to show you exactly what they are. Now, the 3 patterns we observed before many of our biggest winners work together to make up what we call the traffic pattern strategy. So condition number 1 is what we call surging momentum. Now we're looking for a stock or stocks that have a significant increase in upside or downside momentum as kind of a prerequisite. Surging momentum must be present in a stock as the first condition for the traffic pattern strategy. Our breakthrough came when we discovered what we call predictive momentum patterns. Now, we discovered through empirical research that initial momentum surges were very difficult to predict. So that first surge of momentum that just can come from nowhere, we found was only predictable, call it 15 to 20% of the time. Therefore, with these initial surges, we don't try to predict these. We don't try to predict the initial surges. We then discovered that continuation momentum surges could be predicted with much greater accuracy, upwards of 70+% of the time. Therefore, the traffic pattern ignores the initial momentum and only focuses on continuation momentum, continuation surging momentum. So let's take a look at a chart, and I'll show you exactly what this is. So I think in your mind, this is a momentum indicator on the bottom. We've got the stock chart on the top, and you can see on the bottom of the chart, you've got this initial surge in the green bars here. That's the initial surge of momentum, and then where the green arrow is, that's our continuation momentum. And so that's what we're looking for as the first condition in the traffic pattern. You notice that once we see that, then we light up the first light. Now you'll also notice, this is subtle, and we'll get to this here in a minute, but there's a little bit of a we'll call it a cyclical pattern here with momentum. You'll notice that here more so in a minute, but this is condition number 1, continuation momentum. You've got to have the first surge of momentum as a prerequisite, and then we're looking for that continuation. So now let's go on to condition number 2, which we call cycle swing. Then we're looking for a well-defined cycle swing in the direction of surging momentum. And by the way, I'll get to all questions here at the end. Let me just get through all the slides if you don't mind, just to make sure we've got enough time to cover the content. We found that surging momentum often supercharges the cycle swings. The cycle swings define the price action that the traffic pattern targets trading. The cycle swing must be present as a second condition for the traffic pattern strategies. So let's take a look at this. This is a normal cycle indicator down here on the bottom. You see the cycles visually, right? You can see the fairly well-defined cycles here. And once we have surging momentum, then we've got to define what is the period of time we really want to take advantage of during the trade. And it's a swing. It really boils down to a cycle swing. So in this case, where the green arrows are identified on the price chart and the indicator here is the equivalent of an upcycle. So that lights up the second condition here on the traffic pattern strategy. So in your mind, think of it this way. Think of it as a supercharged potential swing, right? Because you've got this continuation momentum as condition number 1, and now we've got the cycle, well-defined upcycle, as condition number 2. And so we're looking for that kind of more supercharged cycle, stronger cycle. Now, condition number 3 is what we call the peaks and troughs trigger. Now, the third condition is really more of a trigger, which enables us to get into swings when they first start. The trigger is designed to detect the beginning of a swing at the cycle low or the cycle high. So let's take a look at the chart here, and I'll show you what it looks like. Now, we actually have developed additional, very strong, we'll call it a condition 3 indicators, but you get this in your mind. We're looking for a trigger that tells us there's a likelihood of the next upcycle to start. So this is saying, okay, we now have the conditions where we're trying to get into the cycle low, or the next upcycle near the low as close to possible, right? Our goal is to ride it out. We don't want to overstay our welcome. We don't want to stay past the cycle peak. We don't want to get in too early before it bottoms out. So the cycle we'll call peaks and troughs trigger. In this case, the trough trigger is helping us to try to get into the trade as close to the cycle low as possible. So when we get this condition to be true, this actually lights up the third of the green lights, the bottom trigger light. So when you put them all together, when all three conditions line up, then we get the traffic pattern trading signal. So in your mind, let's take a look at what this looks like. So first and foremost, you have to have the initial momentum. We've got that there. Excuse me. Then we've got continuation momentum. So that's condition number one. Check the top green light. Then you can see a fairly well-defined upswing. That's the life expectancy of the trade. We want to get in as close to the cycle low, get out as close to the cycle peak. That's condition number two. Check that light. This middle light grows green. And then we've got the trough trigger, the bottom trigger here, and that's the bottom light here. Then we light up the bottom light. So when all three of these conditions exist, this is what we call the bullish traffic pattern. And so instead of buying the stock, now we could go out and buy the stock, we choose to buy options, because options can make a lot more money. They're leveraged versus stocks. Now you also are risking more money, so you can lose more money, right? But you can also make a lot more money too. And I'll go over this here in a minute, but one of the beautiful things about buying calls and buying puts is that your downside is limited. So if I spent $100 in the call option here, if the sky fell, I was dead wrong, I cannot lose more than my $100. If the trade goes my direction, I can make many fold that. I can make 200% or 300%, $400, $500, etc. So there's a lot more upside potential than there's downside risk when you buy options. So that's the thing we like about that, using options with this particular pattern. So when all three bullish conditions lined up, we look to buy call options. Traffic patterns can also be bearish as well. Bearish traffic patterns forecast when a stock is likely to drop like a rock. So for bearish traffic patterns, we first look for negative surging momentum. It's just the opposite of the bullish case. So you'll recognize the logic here. So you'll see the first downside here, this first momentum over here. We don't try to predict that, because that we found is hard to predict, about whatever 15 to 20% of the time or less. That's hard to predict. But the second occurrence here, we have the initial momentum, and then we have the continuation momentum. So over here, this is what we're trying to take advantage of. That's what we're trying to predict. So that lights up the red light because it's now to the downside. We're now forecasting that prices are likely to drop, and we can buy put options. If you're new to trading options, the put option gives us the ability to profit when prices fall. So that's condition number one. Second, we're looking for the negative cycle swing. Before, with the bullish condition, we wanted the up cycle. Now with the bearish pattern here, we want the down cycle. So you can see here, this is the life expectancy, all the red arrows here, of when we'd like to be in this trade. We don't want to enter early. We don't want to overstay our welcome. We want to be in this trade ideally during the downswing. So when we have the downswing, that's our second condition there of the bearish traffic pattern. Third, before I showed you the troughs trigger, this is actually the top trigger here. So it's just the opposite. This is designed to show us when the peak, the cycle peak, is likely in place, and then again, help us with our timing to get in as close to the cycle peak as possible. This ends up meeting the third condition of the traffic pattern. Now, with all three of these triggers line up, we get the bullish, I'm sorry, in this case, the bearish traffic pattern showing up. So it's confirmed, if you will. So again, we've got the initial momentum, check the box, surging momentum. So that's continuation downside momentum. Check the top red box here. And then you've got the down cycle. You can see that fairly clearly. Check the middle red light, if you will. And then the bottom one is the top trigger. Check the top or the bottom red light on the traffic signal. So all three red lights are present. That gives us the bearish traffic pattern. With bearish traffic patterns, we look to buy put options. When traffic pattern signals occur, they seek to forecast a big move in the stock. So remember, when you think about technical chart patterns, it's usually a direction thing, right? So there's a lot of like head and shoulders pattern is forecasting a downside move, but it's not forecasting an explosive move. A pennant pattern or a rising triangle pattern, for example, is forecasting a continuation upside move, but it's not necessarily forecasting a more explosive move than normal. So most like candlesticks or head and shoulders, double tops, double bottoms, whatever, most chart patterns out there are concerned with direction. Now that we're piling up a couple of conditions here, we actually have the potential to not only have a directional move, but also to have an explosive move in that direction. Like for example, when Capital One had all three bullish conditions, a bullish traffic pattern was generated. And this is really, if I were to show you like a textbook one, this is it. This is textbook right here. So we'd love to find these. This is one where we saw the initial surge, and then we had the follow-on momentum here. So beautiful. Check the top green light, that lights up. Then you have a beautiful upcycle. Cycle's very well defined here in Capital One. That lights up the middle green light, and then the bottom trigger here gives us the timing element. That's the bottom green light. And then we recommended, this is a real trade alert, buying the Capital One Financial 87.5 calls. Those jumped in value by 480%. That's why we like to buy the call options with this pattern. So $100 would grow to $580, or $1,000 turns into $5,800. Or when IBM had all three traffic conditions, a bullish traffic pattern signaled, and we confirmed, and IBM options increased. Now, I wanted to show you this example because this one kind of fizzles out a little bit. Not all of them are going to fall through and be explosive, but there's that potential there. You know, we can find a lot of very explosive ones. So in this case, we have all the conditions. We have the initial momentum, but the follow-on momentum, the continuation momentum, kind of fizzled out a little bit. But that was still meeting, you know, the pattern. We still had that. So the top green light lights up, and then we have the upcycle here. Middle green light lights up, and the bottom trigger where the blue arrow is, and that lights up as well. So we had the conditions met, but this one ended up just to be very nominal. So it went up a little bit, and the IBM 152.5 calls only jumped in value by 111%. So they're not all, you know, these really explosive trades. Sometimes they fizzle out, and then sometimes they fail as well. So just like any pattern that's out there. Now here's what's interesting is this is what we missed. Now this is the trade we actually published. Look what happened here next. We have another continuation momentum, right? That's another traffic pattern. We have another upcycle. We have another bottom trigger right here. So there was actually a second traffic pattern trade that we missed. And this one was really explosive. So this one was one that was like up 300 or 400%, and we missed that. So we just weren't, we weren't looking for that, I guess, for a second one in a row, but that was going to happen as well. So that was actually a really nice traffic pattern that we actually missed. Norfolk Southern had all three bullish conditions. We knew it was likely to take off in the upside direction. Here's another really nice example of a textbook traffic. You got initial momentum, and then you've got the follow-on continuation surging momentum, light up the top light, and then you've got the upcycle swing, light up the second light, and then you've got the bottom trigger here, light up the bottom light. You've got a bullish traffic pattern. We recommended buying the NSC 130 calls. Those really ended up surging here. So this is an example of where it really goes our direction, everything lights up, and it really falls through like we hope it would, right? We expect it to. And that's up 572%. So 250 grows to 1,680, or 1,000 turns into 6,720. Now, traffic patterns can also forecast, as we said, when stocks are likely to drop, just like they go up. So let me show you a couple examples of when all the conditions line up. Like when Aetna had all three bearish conditions confirmed, we knew it was likely to sell off. This is another real trade alert that we broadcasted. And so here we have initial momentum, and then you have continuation momentum. So the top red light, in this case, it's bearish, lights up. Then we have the down cycle, middle red light lights up, and then we have the top trigger at the very bottom. Bottom light lights up. We've got our timing element. It ends up dropping a little bit in value, but it's not as explosive as we would have hoped. So this one ends up making 202%. Not terrible. It's not a bad trade. We're not complaining, but this is a real trade alert where we said buy the Aetna 175 puts. And all three bearish conditions now for the bearish traffic pattern lined up. So 250 grows to 755. You get the idea. 1,000 turns into 3,020. So you see what different levels of buying these options would mean, you know, depending whether you're buying a couple hundred, a couple $1,000s worth of options. You can buy $10,000, by the way, if you wanted to too, and that obviously would grow to like 30,000, right? Now, when the Tata Motors had all three bearish conditions, we were confident it was about to sell off hard. This is one that kind of fizzles out on the downside. I want to include that. So we had the conditions, we had the initial momentum, we had continuation momentum, we had the down cycle. You can almost visually see the down cycles kind of fizzling out a little bit. And then you had the top trigger. So all three of the bearish conditions were met, the three red lights lit up, and then you get, you know, just kind of a little bit of a fizzle here. So we recommended buying the TTM 26.5 puts. In this case, it wasn't an out of the park home run. It wasn't a really big explosive trade. It made 120%. Again, we're not complaining here, but this is an example of where it just kind of fizzles a little bit. Doesn't have that really big drop that we're hoping for. So the 250 grows to 550, or 1,000 grows to 2,200 in this case. Then Norfolk Southern had all three bearish conditions confirmed, so we forecasted it would drop in value. Here's another one. This is one where the timing is off, so that can happen as well. But we forecasted NSE 130 puts. This is a bearish three-light pattern, but you can see that it went against us for a little bit, and then it went down ultimately. So it ultimately made 115%, but it didn't go right away, and that can happen too at times, and that's something that still, it doesn't mean that the trade's an automatic loser if it goes against us. It could still pan out, but in this case, the timing was just off. That erodes a little bit of the time value in the option. 250 grows to 537, or 1,000 grows to 2150. Now, let's talk about some of the essentials here with the pattern. So one of the questions is, what is the percentage? Well, I'll show you. And so let me just show you the actual trade alerts that we published over the last couple of weeks. That'll answer your question. You get an idea in your mind as to what percentage of these trades ended up being really explosive, right? We've had the service live since November. I'll show you here in a second. If big moves in stocks can make big money trading options, right? And if our risk is always limited to the price we paid for an option, this is one thing that I love about buying options. Now, when you think about it in these terms, so if I'm buying an option, right, I'm buying a call, we want prices to go up. Let's say this is my wrong scale, right? Let's say I'm a little bit wrong. I'm going to lose, a little bit of money here. Let's say I'm medium wrong, right? And I think the stock's going up, but it ends up going down a pretty good bit. Or let's say I'm really, really wrong here. Now, here's what I love about buying options, because here's the worst case scenario, right? Is the price you paid for the premium. So if I spend $100 on the premium, I cannot lose more than that, regardless of how wrong I am on the right-wrong scale. Does that make sense? Now, the opposite side, if I'm right a little bit, I've got the potential to make a little bit of money. If I'm right medium, I can make pretty good money. If I'm right, like incredibly right, then I can make a lot of money. So see how the right-wrong payout here, I'm kind of just drawing this in. This means that I can make a lot more money in the upside than I risk on the downside, because when you buy an option, your risk is always capped. And I'll show you a trade example here in a minute where I bought $1,000 worth of calls and the bottom fell out. It's a huge losing trade, but I didn't mind, because my worst case is that I couldn't lose more than $1,000 in the trade, right? So I'll show you that example here in a minute as to why it's great to buy options. But the key is we have to have the timing element if we're buying calls or buying puts, and that's what's so beautiful about this strategy. So our risk is always limited when we're buying options. It's possible that the traffic pattern may be the best way to swing trade. I love this pattern as a swing trading pattern. In fact, a breakthrough strategy could be one of the best ways to trade options that I've seen. Now, that's a big statement. So why would I say that? Well, the reason why is because these patterns are around in all types of markets. So we found these in like a bull market. We find these patterns in bear markets. We find these patterns in high inflation, low inflation, good economies, bad economies. So it's a universal pattern that's not like a head and shoulders pattern. I can't even tell you the last year I've seen the head and shoulders pattern. I haven't seen the head and shoulders pattern in years, right? So this is a pattern that's not, rare. It's not like the green flash in the ocean. It's like one of those things that happens literally quite a bit. So that's why I love it. And then the other thing I love about it is it not only predicts direction, but it also gives us that potential for explosiveness, right? So, and the best part of this traffic pattern is it's really, really simple to trade. Just wait for all three conditions for the bullish side, 3 green lights, and then we look to buy calls, or the 3 red lights, we look to buy puts. So let me go ahead and just show you examples of some real trades here. What really convinced me, and when I say us, I've got a couple guys who work full time for me in my trading desk, if you will. So they help me manage trades and whatnot. So what really convinced me of the power, and my team, the power of the traffic pattern, was a series of real option trades that I placed. Ironically, I'm going to show you the worst trade where worst week in history of the stock. I'll show you this in a minute, Oracle. But I didn't lose more than $1,000. But all the winners that week, all the winners this short period of time were all traffic pattern signals. And the best part is all trades that were winning this period of time were traffic. So traffic patterns in this, this period knocked it out of the park, right? They were exploding all over the place. My worst trade in Oracle was it was a different strategy I was putting that on for. Oracle, I bought calls. Oracle got crushed. It was the worst down week ever with a surprise and bearish earnings report. Guess what? I could not lose more than the $1,000. So this is a series of real trades. Here are the results from a very good week in trading. Now, this is not representative of the norm, guys. This is a rarity, but it can happen over time. So I don't expect to find this many traffic patterns in such a short period of time, but it can happen. All right, so in this case, we saw a bunch of them. I put on a bunch of traffic pattern trades here. Now, the first thing I'll point out is the obvious, is the reds are losing down here. One of the reds right here, Oracle, right? This was down 100%. And that can happen when you trade options, guys. We're not always right. We know no pattern in the world's always right. But the thing I love about this may sound strange to you, is I put bought $1,000 with the Oracle 52.5 calls, and then the stock got crushed. This wasn't a traffic pattern, but it highlights the idea of I can't lose more than that. So I was super, super wrong in that trade. Guess what? My loss was negative $1,000, and it wasn't worse than that. So my loss was not proportional to how wrong I was. If it was, I should have been down like 25,000, right? But I wasn't. I was down 1,000 because you cannot lose more than the value of the option. Now, here's the upside. This is why I was so excited about this pattern. These are all traffic pattern trades. So UVXY, I bought the 15 calls. They were up. This trade was up 3,024. That's not the value of the option. That's the profits. So I made $3,024 in profits. I had a traffic pattern where I bought the UPS 110 puts, made $3,852. All these trades were $1,000 trades, by the way. So I lost 1,000. My big loser in Oracle could not lose more than that. But my first winner with UVXY made $3,024. My second winner with UPS made $3,852. My third winner, UNH, I ended up buying the 225 puts. That made $4,555 of profit. AT&T ended up buying the 37 puts, made $1,885. You get the idea. The SPYs bought the 273 puts, made $4,592 in profit with the same risk. I bought $1,000 worth of all of these. Now, SDS, let me point this out. I will never trade SDS again. We nailed this. The timing was there, a traffic pattern was there. The slippage was so bad in these options that we just got, I mean, I should know better than that, you know. We got crushed. We made 84 bucks in the trade. Should have been like, you know, 2,000 or 3,000, but just got destroyed in the slippage and commission in this trade. So I will never trade SDS again. I don't recommend you do either, unless something's changed since I've traded that, and I don't think it has. Procter & Gamble, you got right here, beautiful profit here, 79 puts. NAV, Navistar, 35 puts, made 1,024. You get the idea. MasterCard, 2,900 in profits. J&J made 27. Home Depot made 22. Goldman Sachs made 4,400. You get the idea. Lots of winning trades, and these were all traffic. So if traffic hadn't gotten my attention before, and you can imagine, my background's in the hedge fund, so I'm industry, so I'm always looking for a lot of different patterns. But this was the one that shook me by the collar and said, whoa, that was crazy how many of these traffic pattern trades popped up, if you will, in a very short period of time. This is not the normal case. This is unusual how many we had, but it really drove home to me how powerful this strategy was. So a mere $2,000, for example, in each one of these trades, that would have been a $90,000 week. Not too terribly bad, right? Now, after this week of trading real money, then we really began to understand the power of the traffic pattern strategy. So from my trading desk guys and myself, we were looking at this going, this is crazy. This is really a great pattern. We really enjoyed it. And so that really was getting our attention. Now notice, it's not all winning trades, guys. This is real trading, right? I had a 99% loser. It wasn't a traffic pattern, but again, showcasing the great thing about buying options, I was limited in my risk. This was not a traffic signal, but one of the other strategies. And now it's important to understand there will be losing traffic pattern signals. They happen, right? We have failed traffic pattern signals, just like you're going to have failed other signals or other patterns as well out there. So understand there will be losing trades. Profitable trading over time, guys, is always about making more from your winners than you lose from your losers. It's about good money management. So you don't want to go over, like I wouldn't want to go out there and risk $100 in one trade and 1,000 in the next. Whatever your risk is per your account, be consistent, because you never know which trades are really going to be the explosive winners, right? But there will be losing trades, and it's not, I'm not suggesting that it's even, you could have a flurry of losing trades. You could have a flurry of winning trades. So I'll show you the real traffic track record here over the last couple of months here in a second. You'll get an idea in your mind of how it can be streaky sometimes. So no trading strategy in the world wins all the time, and it's important to understand the traffic pattern is the same way. But what I love about it is that it has that explosive potential. So it's okay to see 99% losers when you're finding large winners like 196 and 434. So there's a traffic pattern trade that just went off the board where we lost 100%. It was a surprise, really strange deal with FedEx. We had a bearish traffic pattern, but then UPS jumped, FedEx jumped, and it went against us. So it was one of our, we'll call it more rare down 100% trades, but at the same time, we had a trade in Square, a put option traffic pattern that absolutely crushed it. So I'll show you those side by side and how we made a lot more in the Square than we lost in FedEx. So that's what our strategy is: limit the losers and target these really big explosive winners. So let me go ahead and answer some questions here. But first, for those of you asking, Mark, how can I get traffic pattern signals? You could do this yourself, guys. If you're a do-it-yourselfer like I am, I showed you all the conditions. I held nothing back. So you could monitor a list of 150 optionable stocks every day. Do your homework. It's intensive, guys, and I'm not gonna lie to you, it takes time. You can track these, the markets for these traffic pattern signals. You got to go through them and define these conditions. You can do it. If you're a do-it-yourselfer like me, I encourage you to do that. Now, if you're a person who says, Mark, just tell me what traffic patterns you guys find, then the good news is my hedge fund research team and I created a way for you to see the traffic patterns we find. We created a very, very powerful scanner that can scan hundreds of stocks, right, to find the best traffic patterns. So we've narrowed it down, and our list is updated every so often, but in general, we're tracking kind of, 150 to 200 stocks, optionable stocks. So a professional trading desk team, we monitor 150 stocks every day, so you don't have to. Now, we expect to find approximately 5 to 10 traffic pattern alerts a month. Sometimes it's more than that. It seems like it's been more lately. And this is sent right to your email inbox. So this is what you expect to see. We will tell you the exact symbol, strike price, expiration date for each option trade alert. So there's no gray area. This is one thing I just don't like in trading, is any gray area I'm always trying to eliminate. So we tell you the exact symbol, Amazon, we tell you the exact strike, 37.5 calls, and the expiration date. This is just an example, right? So this is the information you get. There is no gray area, there's none. So you don't have to guess, well, what expiration date should I have? No, we tell you exactly the expiration date in every single one of these. We tell you the exact strike. We've done a lot of research, by the way, and found that certain strike prices do a lot better than others. It's simple enough for my 8th grade daughter to trade this. So I showed her how it works, showed her how the alert service worked, and she could go on and trade all of this very easily. So it took about 5 minutes for me to show her how to do this. The best part is we're going to target traffic pattern trades like this one. This is a textbook one, Capital One. This is a real alert we published a while back. Capital One Financial, 87.5 calls. All three conditions are there, the 3 green lights. Then we said buy the 87.5 calls. Those jumped in value by 480%. $100 grows to $580. $1,000 grows to $5,800. They also are bearish sometimes, like the SPY 274 puts. We recommended buying, that, and this jumped in value when the 3 red lights were there, 488%. Right? 250 grows to 1470. 1,000 grows to 580. Mark, how's your recent ones done? Let me show you. I'm going to pull it right up here in a second. That's not all. Now, if you're interested in following our service, I really want you to master this strategy. So I created a special report ebook called Traffic Pattern Exposed. In the Traffic Pattern Exposed, I'll walk you through the trading system, soup to nuts, everything you see here, along with clear examples that will be available for you to follow. So here's what's in that report. Just quickly here, I talk about condition 1, momentum, surging momentum, continuation momentum. Condition 2, cycle swing. Condition 3, peaks and troughs triggers, combining the market conditions, just like the genius convicted felon story taught us. And then traffic pattern examples, call option examples, put option examples. It's a 20+ page report, I think. I'm just going off memory here. It gives you a lot of information. So I want you to really master this. Now, if you're saying, Mark, I'm new to options, no problem. I actually created a series of quick start videos for you. If you're new to option trading, I'm going to introduce you to the basics of trading options. Oops. So this is, let me go back one here. This is what's in there. These are all videos I've created. So how to buy a call, how to buy a put, how to request clearance for different kinds of accounts, talking about that. The option chain, what is that? What are the Greeks, basic Greeks, delta, what is gamma? How to close out your trades, what kind of software do you want to look for with this? Underlying charts, how do they relate to options? Option position sizing calculator, we include that as well. all trying to target these really big, 500% or 200% or 100% type explosive option trades. So this is the option position sizing calculator. All you have to do is type in your account size, and you don't need 25,000. If it's 2,000, great. If it's 1,000, 2,000, 5,000, whatever, and then how much you want to risk, right? And then this will do the auto calculations. You type in the details of the option, and then it's going to say it recommends 2, maybe 0. If you have a small account and it's a really expensive option, it may recommend 0 options. So those are, this is what does the auto calculations if you want it done for you. And then this is the ultimate, the traffic pattern ultimate trade alerts package. So let me tell you about this. We're actually running a special for the toasted trader. So this is scanning 150 optionable stocks plus with our special scanner. My trading desk guys are doing this. These alerts are sent right to your email inbox. Now, if you have a smartphone, you can set up a dedicated email that's just for your alerts. Like I could say marktraffic@gmail.com and then turn on the push notifications. It's a beautiful thing. We tell you again the symbol, the strike price, the expiration date. There is no gray area, right? We're on the record. There's no guessing. The entry alert, we give you a profit target, and then we give you what I call strategic trailing stop. Once it's gone in our direction a bit, we introduce a trailing stop. Profit target for each trade is included right away. We give you a reference level. Where was the stock trading when the alert was published? Where was the option trading when the alert was published? If you're out to lunch with friends, you get the alert and you say, I just can't get to it in like 30 minutes or so. You're going to have a reference level for both the price of the option and the stock, so you can gauge in your mind. Have I missed it? Can I get in at a better price, or is it still right around where I need to get in? Generally speaking, it's not minute by minute, but it's always better to try to get in sooner, in my view. This is managed by my professional hedge fund trading desk team, and this is professional customer support, obviously, we offer if you have any questions. So here's the promo, guys, for the traffic pattern ultimate alert service. Normally, this 1-year service goes for $1,997. Normally, the traffic pattern exposed is $997. Intro to option on demand video, $650 normally, and the position sizing calculator normally goes for $100. So all this normally is $3,700, guys. We created a special 6-month subscription for $495. First 25 people take advantage of this. Go to www.3xoptions.com/go. So let me see if I can copy that in there. I think I can. Okay, so
I can do it for you, Mark.
Okay,
Yeah.
Thank you. Yep. All right. So thank you for that. So yeah, she'll type that in there, Jeanette. Well, thank you, Jeanette. And that's the link you want to go to. It's not, you won't find it at 3xoptions.com. You've got to go to 3xoptions.com/go. And then you get the special pricing, the $495. This is a special 6-month service. Now, let me tell you a little bit more about this and our guarantee around this. Now, I've shown you 14 real traffic pattern trades that each could have paid for the entire year, not to mention the special, $495 prices. So these are all the trades that I showed you, 14 trades that could have paid for, the 1-year service. Right? These are all explosive traffic pattern trades that I found with real trading. Now, we use hedge fund scanners and market analysis tools to find our traffic pattern trade alerts. We have one of the few alert services in the world managed by a professional hedge fund research team. It's almost like having your own personal research team whose job is to go out and find these patterns for you. Now, here's my guarantee. We have to show you 3,000% of winning trades. Now, I'm just talking about the winners here. You're going to have losers, all right? Just understand that. And we have to show you over the next 6 months, 3,000% of winning trades. If we can't do that, you get 6 more months for free. All right, so 3,000% winners, we've got to show you. If we can't do that, then you get 6 more months for free. Now, the service also automatically goes monthly. We've had a lot of people say, okay, Mark, what if I want to stay in after month 6? Then it automatically rolls to $97 a month. You get an email after 6 months. So a lot of people have asked for that. If you don't want that, let's say after 6 months, you say, I got the hang of it. I want to find these patterns myself. No problem whatsoever, right? So we will cancel anytime you want. You can find it yourself. But if you want to stay, you also have, we can offer the same pricing where you can get 6 months with the price of 5 essentially. Otherwise, it's $97 per month. This is a real trade alert example right here. We're targeting these with the traffic pattern signals. All right, so this is the promo again. I'll throw it up there. Mark, can you show me recent trades? Yes. So let's go ahead and just look at, here's where you go. So once you log into 3X Options, guys, this is what you're going to see. So you go to members, you go to traffic light options, and then you go down here. Now, it's not all winners, guys. Okay, so FedEx right here was kind of one of those fluky trades, gapped against us, and we lost 100% on this option, right? I'll show you a track record out of the gate since inception too. Oracle's down quite a bit too. These are two big winning trades, but guess what? Square, we crushed it. So Square put option, that is up big. Starbucks is doing really well as well. MGM is doing well. These are some of the newer ones we've got. Just went on, I think the XOM 60.5 calls went on just yesterday. Yesterday, two of them did, and so did GLD. So you might have time to get into these two. Let me show you the track record. You can see all the trades since inception. So let me show you how this works. Well, first of all, let me show you the supporting materials. So when you get to this page, at the top is our current open traffic signals. Scroll down, you get to all the supporting how-to videos. So how to put the alerts on. You get the traffic pattern exposed ebook, option position sizing calculator, option video library. I can click on this, and then it's going to take me over to all the different videos, right? The overall arching video. Look at all these topics right here. So if you're new to trading options, you've got all these topics: in the money, at the money, out of the money, how to buy a call, how to buy a put, defining call options, chain, everything. So really to get you started, now you're going to want to continue your education after that, but we supply a lot of supporting materials. And then we also track all of our recommendations. So here's the closed traffic pattern trades. So here are the recent ones right here. Total right now. Now here's how we track it, because we've got two different exits. We've got the profit target exit and the trailing stop exit. So the way we do this is what's called max profit exit. So if the profit target makes 100% and the trading stop makes 120%, we're using the trailing stop, for example. So just so you know, that's how it's tracked. We got to figure out one way to track it. And so you can see recent Hess we just closed out, that was up 74%. Philip Morris closed out up 64. So not super explosive, but not bad. CSCMA closed out, Comcast 80% up. Let me go ahead and show you like a streakiness sometimes you'll see. So I'm going down to like the beginning days. So our first traffic pattern signal here, and I'll make this very, very fast. So this right here, guys, this was down. Our first ever traffic pattern was down 20%. So if you bought $100 worth, you would have lost 20 bucks. And then one was up 37, one was up 50. We had another loser here, barely down, Verizon. So if you bought $1,000 with that, you would have lost 60 bucks. And then we had a flurry of 11 straight winners. So you can get the flurry of winners, but you can also get flurry of a few losers in a row too. So if I scroll up here, you can see really explosive ones. We had a up 362. We had up 303, up 169. So we can get the explosive ones over time as well, but we can also get, flurry of losers. Like here's like 4 or 5 losers in a row, just so you understand that. All right, so being respectful of time here, Jeanette, thanks for letting me talk today. Guys, if you have any questions on this, let us know, and we'd be more than happy to answer those. This is the very short-lived promo we're doing. $497, guys. You get the 6 month, you get the guarantee of 3,000%, or you get another 6 months for free. This rolls to $97 a month after 6 months. Cancel anytime after the 6 months, and you get everything you see here: special report, the video library, all the supporting credentials, and the option position sizing calculator is all included in this. And on average, guys, look for about 5 to 10 traffic patterns a month. Now, we could have more than that, but that's kind of the average. Jeanette, thank you for letting me run over a little bit here.